3, 2, and 1. The weekly candle has just closed. New weekly opens at 21,840. And what we see for Bitcoin right now is this long term from 69K, guys, all the way down on linear scale. We're basically at the potential breakout point to break the macro downtrend on linear. On log, it's a lot further away, but also we have the weekly RSI downtrend, which we're currently about to break out of. So Bitcoin has some potential bullish, pivots coming, potentially bullish trend shift. Ethereum going into the merge, looking pretty good. Bitcoin, big things happening soon, probably. What you're looking at right now is the 10-month downtrend that this market has been in. It's really crazy when you think about it. If this downtrend were to be here until 2 months from now, November, we would have a 1 year long downtrend, straight down for a year. It has been absolutely brutal, but Bitcoin is showing some signs that maybe we are about to play out some kind of bullish trend shift back to the upside. And in the context of a 10-month, nearly a year going down, well, there's got to be some upside at some point, right? And Bitcoin is now coming up on the linear macro downward sloping resistance line. Guys, before we get into this video, be sure to smash the like button and subscribe to this channel if you're new. So Bitcoin right now is trading at 21,778. This is actually just 25 minutes after the weekly candle close. Bitcoin has closed the weekly, and the weekly closed in between these two downward sloping resistance zones. And like in the last video, we were discussing that Bitcoin is set up in what could be a double bottom. If you're looking at this weekly chart, in the beginning of the year, when Bitcoin came down to about 33K, we tested here, bounced up, and we basically weren't able to hold that level and broke down. This is starting to look a little bit different. Instead of being continuation down, well, we came down to 17.5, rallied up, found support just around 18,500, created a slightly higher low, held that level, and bounced. So this is looking a lot more promising here than it did back here. And my friend over here, TA Trader Alan, posted this chart, and it's showing you the weekly RSI downtrend, which if you look over here, we are currently getting a breakout of the RSI downtrend on the weekly. And usually in bear markets, when you get that final break of the resistance on the weekly RSI, it can usher in some upside momentum. A good example, so if you're looking at this chart from the long term, right, this is the downtrend on the weekly RSI right there. And a good example would be over here in 2015, when we had this downtrend, the weekly RSI is downtrending, seeing lower highs, so on and so forth. And when we get above that zone, we create some sort of bullish pivot from going straight down to just going sideways. Though the macro downward sloping resistance line is still far away, just like now, it's still far away. But my point is, when you break out of the weekly RSI, that's at least going to bring us some sideways momentum, some stability, and maybe put in some kind of long-term bottom formation. In every cycle, what we see is that we don't really have a bull market until we break this downward sloping resistance line on the log scale chart. Same thing here, 2018. And I think the same thing will likely go here. And we have a shot now at breaking out of the weekly RSI downtrend. And if we do, that's going to at least put us in, some sort of sideways range where maybe we find some stability, we get some time to accumulate, and then ultimately look for a breakout above the macro trend line somewhere over in 2023. Right now, it's looking like we might break out of this weekly RSI downtrend, which has actually started in the beginning of 2021. Since then, we've just been seeing lower highs on the weekly RSI, but it's very likely, in every cycle, it's very likely when you're at this low point, the weekly RSI is that low, well, you're at a point where likely you're going to get some sort of trend shift, at least for some sideways action, guys. So I don't want to be the guy that comes on here and gets super hype and says, we're going to break out of the weekly RSI and it's bull market again. I mean, probably not. It's more likely that, we could see higher highs in the short term to retest the macro trend line, but more likely than not, sideways action, longer term accumulation, and then a recovery going into 2023. But when you start to see structure like this come in, these double bottoms, breaking macro resistance lines, stuff like that, it starts to become more likely that the market is agreeing on these prices just below 20K as being you know, a good deal and the price just gets supported anywhere below 20,000 seems to be a fantastic opportunity, at least for the time being. Now, the one factor that I've been paying close attention to is the US dollar index. And you guys know, if you watch this channel, the trend that the DXY has been on is that it comes up in a parabolic trend, breaks the parabola, forms a larger one, breaks that parabola, forms an even larger one, and it looks like we might be doing something similar here. And like we were talking about the last video, 107.70 is that next potential large parabola, you know, that parabolic expansion point where the parabola would just get larger, right? Where the parabola would just get larger in size. So we have probably a couple weeks to watch the DXY to see if this is going to end up being, you know, a failed support zone where we actually just start trending down, and that would be super bullish for crypto, or if this is just yet another higher low on a major parabola. And so that is still to be determined, right? Of course, if the US dollar index continues to surge, well, then, you know, we'll see. We'll see if this sub 20K bottom holds. But, you know, in the context of, like I said, down for almost a year straight, well, getting some kind of relief would make sense. And now with this price action taking place here, with this weekly candle closing above 21K, you know, it seems maybe this is some kind of bottom formation. If you're looking at the chart, what areas of interest do we see? This zone here, which is about just below 29,000, 30,000. That zone is sort of the biggest level. I would say for the larger players out there, anything below 30K is good accumulation. So even if we did see some kind of rally, we probably wouldn't be going much higher than that for the time being. Usually bigger players like to have more time spent at low levels. So, you know, a lot of these big institutions are not going to be pumping the price. They actually want the price to stay low for a while so they can get what they need, right? They're not the guys that just like pump the price randomly, right? They're probably buying at these levels and looking to, you know, continue to accumulate below 30 and then maybe a recovery next year. Now, we've been looking at linear. If we go to log scale, this downtrend line is totally different than linear. And I was just talking about this, but this is my point, guys. It's likely that, you know, we have at least several months to chop it around, you know, choppy sideways, whatever, however this is going to play out. So I don't expect anything like all too big in the next few months, though of course we can pump up to 25, maybe even test above 25K, but then we'll probably see some more steady accumulation. But for now, when you look at linear scale, well, we're coming up on a major macro trend line. So if we break above that, maybe this week, well, that could, you know, mean that we're going to test at least 25 or maybe higher. But I think we'll probably see a lot of resistance at 30. So just keep that in mind. Hope you guys enjoyed this video. I'll see you all in the next one.